While we move to gas, and city gas companies are in focus, the government has asked ONGC and GAIL to allocate LPG shrinkage to the city gas companies in a phased manner. Now, what does this mean for these IGL, MGL and the likes? Vivek is here to explain just that. Vivek.
Well, that's right. You spoke about oil companies. Now we're discussing the gas companies. Quite a lot of news flow that's come in. So now, what we are actually highlighting is a circular that is dated December 31st, 2024. In this particular circular, government, and the MOPNG have actually asked both GAIL as well as ONGC to allocate LPG shrinkage to the CGDs, which is the IGL, MGL, as well as Gujarat Gas. This is going to be done in a phased manner. So out of the total LPG shrinkage of close to 2.55 units or million metric standard cubic meters a day, 1.3 units is going to be allocated to the CGDs. Along with that, they've also clearly instructed GAIL to not reduce allocation further without the ministry's explicit approval. Now, what do analysts say on the back of this particular development or on the back of this particular circular that has come out? Number one, what they're saying is that this particular move restores nearly 1.3 units of the APM gas. Now, remember, in October as well as November of 2024, the APM gas allocation for the CNG segment was cut very sharply from 70% to 45%. Remember, it was cut by almost 6 units. Now, what this move indicates is that gradually over a period of time, close to 21% of the total cut that had been taken away as far as APM gas allocation to CGD is concerned will now gradually return back to the CGDs. And there will not be a change unless there is an explicit circular that once again comes in from the government. So now what analysts say is that this particular move reduces the quantum of price hikes that the CGDs would have had to take in order to go ahead and protect the margin. So remember, both volume as well as margins which were at a risk, now that particular risk is mitigated. Remember also price hikes of close to 1.5 to 3 rupees a kg has already been undertaken by the CGDs. So what analysts believe is that the margin erosion that was anticipated has now been mitigated. And on the back of that, you're seeing all of the stocks do quite well in the session.
Indeed, a sharp recovery in shares of IGL, 4.5% higher. MGL and Gujarat Gas also trading with healthy gains. Time for a short break. Up